There is so much to cover in this week's market update that I'm going to introduce myself. I'm Brandon. For those of you I haven't met before, we've got my business partner, Christian, and of course, the good old faithful Jason Lang from Outline Financial. Thank you very much, gentlemen, for joining once again. Everybody's keeping healthy?
You
bet.
Surviving. Yeah, surviving, waiting for my dosage to come in the mail. So
is that how they're delivering it? I think you got your wires crossed, buddy. I think you got your wires crossed.
It's on for like $59.99. I'm pretty sure it's legit.
Whatever vaccine you're getting, I do not want that one. I am not signing up for Christian. So let's dive right into things. I'm going to start by sharing my screen so that we can talk about market stats, because there is quite a bit to cover today. So let me pull it up here. So this is it. We're going to talk a little bit about the TREB stats, and we're going to dive into the big news, the vaccine announcement that just came out a couple of days ago. Then we'll talk about the Verity and the outline stats that we have, low rise, high rise, the rental market, and then some trends and predictions. So let's start with good old Market Watch. The Toronto Real Estate Board produces this once a month, and it's very, very helpful. If you were to take a high level look at this, you would assume that everything is absolutely fantastic with the Toronto Real Estate Board. GDP growth, what I've circled over here on the left-hand side, it's over the previous quarter. So, I mean, big growth there. We saw Toronto's unemployment rate dip back down. So that's definitely some good news. The inflation rate, the Bank of Canada, 1 to 3%. So we're a little below that, but I think we're still within the that bandwidth that they're hoping for. And Jay, interest rates, very, very low. Like money is almost free.
Yeah.
What's the 3 to 5 year fixed and a variable?
I mean, you're everything's under 2%. So you sort of start with that in mind, and then it's just a race to the bottom, whether you have, more than 20% down, less than 20% down. It's very competitive. And I think that's a big part of why the housing market has remained as, resilient as it has through all of this. And, we're not expecting that the economy is picking up a little bit of steam, but this expectation is we're going to be here for quite some time.
I would have to agree. I mean, I think John Pasalis made a really good point that I'll touch on later from Realosophy about where he thinks that this the recovery is tied to. So before we dive into that, let's talk about these year-over-year summary stats that we have down here. Now, keep in mind that these are only for the month of November. So November 2019 over November 2020. And what you'll see here is a 24% increase in sales, a 33% increase in new listings, a 15% increase in active listings, a 13% increase in the average home price, and the days on market, depending what you're looking at here, the LDOM is how many days a listing has, since it's been relisted, if it was, how long it's been on the market. So the PDOM is more reflective of what a home has actually been listed for sale for. So either way, we're down. So homes are selling quickly, prices are up, and sales are outpacing active listings. So you would assume that across the board, prices would be going up and up and up. But as you can see from these stats down here on the bottom, that the majority of this growth is driven either by low rise, semi-detached, detached, and even townhouses, depending on the type of townhouse, and in the suburbs. I mean, there has been I don't want to say a mass exodus. I feel like people have been using that term when I don't feel like my clients have generally been fleeing to the suburbs, but there's been no question that the suburbs offer more space for the same dollar. And I think we are getting to the point where I don't sell the suburbs. I have some realtors that work with us that do, and we know that the suburbs have become very expensive. Jay, are you seeing that in your underwriting and the appraisals? Like, are you surprised at all with how much homes are trading for in Newmarket or Oakville or Scarborough?
Yeah, sorry, my daughter just walked behind here. She's 5,
okay.
So
it's
just a
Zoom,
caveat.
It's the Zoom reality.
Exactly. Yeah, no, definitely we're seeing it. I mean, I don't want to say it reminds me of 2016, early 2017, but the pace of increase is definitely very similar. I think the big difference is before you had a lot of speculation, whereas this time it's end users. So, the values seem to be there. Appraisals are still coming in. But we definitely see, a lot of people at least putting that in their plans to see how could it work for them and what would the cost look like.
Jay,
I would agree.
100%.
Yeah.
For appraisals, are you seeing them still do appraisals from the outside, like not going in the property?
So for a while, they started to go back in. Now they're sort of going back where they'll take photos, and a lot of times, it'll be up to. Often it's up to the seller, well, like the buyer, the buyer's appraiser. So they may say like, do you want me to go in or do you not? And if you have a property that maybe you think you want them to go in, then do that. Or
Lots
if
of
you don't
upgrades.
want them to go in, and there's some beautiful pictures, that is also a very good option.
So, I mean, I think that that's probably going to continue, and that leads me to my next point, which is the vaccine. I mean, we did get the approval just this past week. So I think that that was a big hurdle that we overcome. But I do believe that even though we have this, we are not out of the woods just yet. I think that we're all in agreement here that it's a wonderful step in the right direction, but we do have another 3 to 4 months where, the majority, well, it's going to be a lot longer than that, but a very small percentage of Canadians are going to be vaccinated by March or April. And I think the majority of people, it'll be probably through the end of next summer and into the fall before most people who want the vaccine are able to get their hands on it, or in Christian's case, get it delivered in the mail, which I hope does not happen. But you get my point that we're heading in the right direction, but we still have some difficult months ahead with the cold weather, being forced to stay inside, and the floodgates of immigration international students not really coming back yet. So I think we need, pushing through these stats, because there's so much here, we should talk about our internal stats. And in particular, we dissect these into low rise and high rise. So on the low rise side, we're going to talk a little bit about average price, the number of sales, new listings, active listing, months of inventory, and sales to new listing ratios. So as a friendly reminder, we are simply talking about these core districts right here. We do have market stats, whether it's, Christian's neighborhoods, which is really so much in Leslieville, Riverside, Riverdale, the Beach, East York. If you're looking for stuff over in the West End, Mimico, New Toronto, we have it all. So just reach out to us. But for this conversation, we're talking about the downtown core. Looking at average price growth, Jay, you made reference to something. Christian and I mentioned this about this time last year, was November, December of last year, things were getting a little frothy. And what I mean by that is prices were getting really, really high. Supply was very, very low. And I think that speaks to why you're seeing year over year for the month of November, these stats showing only a 1.3% or a 0.9% increase in detached and semi-detached homes, because prices were getting really high. It seems like years ago, trying to remember last November, but I do recall how expensive Christian and I were discussing things were becoming. Christian, do you remember that?
Yeah, I remember that. It was getting a bit out of hand. It was crazy. So
yeah,
That's
That's
a very good point. I think that's a great thing to remember as we go through all the slides, because you're looking at a year over year percentage, and things are skewed because November last year was definitely hot, very hot. So obviously then you maybe take more weight on the 3, 5, 10 year, which is also there.
Yes, so we are looking at the 3, 5, and 10 year, which hopefully most people didn't have or the need to sell in a year, because again, last November you would have paid a pretty penny for homes in Toronto. But if I do look at the year-to-date averages, detached and semi-detached, a 7 and 8% increase, and then looking at the rolling 12-month average here, again, just over 7 and just over 8% increase in the detached, like the low-rise sector. And I'm excluding townhomes in this, only because townhomes, we do get condo townhouses that get thrown into the mix here. So it can be hard to really look at townhouses and assume that they represent freehold with a piece of tied land townhouse versus a condo townhouse. So we'll talk about those a little bit later on. Looking here at our chart, our lovely visual representation, we saw that the pandemic kicked in, and then everything kind of came to a grinding halt. And then, no surprise, huge pent-up demand came back after we were told it was quasi-safe to get back out. And then again, seasonal fluctuations, sort of. I mean, I think that it was just things were getting very, very expensive, and we're seeing things pick back up again. But we do have these normal ebbs and flows throughout the year. And this year was just difficult because the normal busier season of fall was, or spring in this case, was pushed into the summer, and it's just kind of been all over the place. So let's talk about demand. So sales activity for detached and semi-detached was up 18 and 43%. No big surprise there. People are moving into bigger homes. They want more space. I think the reality of working from home has become real. the return to the office is not happening anytime soon. And what I commented here on this next graph is we saw where the pandemic kicked in. And for detached homes, we have normal seasonal fluctuations here. So we're kind of more or less in line with what is expected of this time of year for detached homes. And when I circled this down here in the corner, when you look at the 12-month and the year-to-date sales, and you factor in the fact that April, May, we saw significant declines. I think that this is impressive, especially when you also factor in the fact that most newcomers to the country haven't been able to get here to the same degree that they have in the past. So I think that this speaks volumes about the types of homes that people are purchasing during this pandemic. Would you not agree?
Yeah, let me jump in there and say I'm always amazed at the resiliency of the Toronto market. I mean, from where we dipped down to, at the beginning of the lockdown, and to come back, like you said, to where we were, I guess where we would have been on a regular year, it's quite outstanding, really. It's crazy how we got to the numbers that we did from basically May until today.
Yeah, I agree. And the other big thing that when we start digging even deeper into these stats is, so we have new listings here, which again, very important. We saw that, sales were up, new listings, so properties coming to market were up as well. But again, we always talk about what I think is more important at the end of any given month. What are the active listings that remain on the market? And when sales are outpacing active inventory, then prices are going to continue to go up. And that's very much what we saw here. We saw that there was no more active listings in the detached market this year over this time last year, but there was an 18% increase in sales, which is why the detached market has continued to see pretty substantial growth in average prices. And semi-detached, not quite to the same extent. I mean, we saw a 43% increase in sales activity, but a 37% increase in active listings. So kind of on par. I do hear people say to me, well, that house didn't sell. And even during a pandemic, people are very in tune and aware of where value lies. Like understanding that you might have to pay a bit of a premium, but not everybody's just going to jump on something simply because it's available. I had a semi-detached home available in the summer that I thought would have sold quite easily. And to be honest, it didn't, and very much to my surprise. So all of that, I think, leads us to one of our final charts for the low-rise sector here, which is months of inventory. No big surprises here. I think what I took out of this chart was that after the pandemic kicked in, we did see a slight increase in the detached home segment months of inventory. But since then, it's dropped. And of course, condo inventory, we're going to talk about in a minute and how it's gone up and up and up. But I was thinking about this, and I think that again, you had that initial rebound, homes came back, maybe the buyers didn't come back to the same extent initially, but over the last 5 or 6 months, I think the reality of working from home and that this is going to drag on a lot longer than I think we all initially thought has become a very real situation. And because of that, and I hate to say this, but like the people that are still gainfully employed have actually benefited when you look at the statistical analysis of how much or the employment opportunities for higher income earners have increased during this pandemic, that those people without somewhere else to perhaps spend their money or the need or the ability to buy bigger homes have done so, which has driven the detached segment of the market down. And semi-detached has just been low for months. The single months of inventory, again, no big surprises here. Detached and semi-detached, very, very low. And I think it's going to stay this way because there just aren't a whole lot of homes that are going to be coming to market that are going to shift this in any meaningful way. Would you not agree? Like Christian, you're even in Leslieville, Riverside, you're not seeing so much more new product come to market that all of a sudden it's shifting the scales in favor of buyers.
No, it mirrors pretty much a lot of this. The numbers are a little bit lower only because we have less density, but I've seen the exact same thing. I don't expect these numbers really to change and a lot of product to come out from now until the spring, and we'll see what happens in the spring. But I don't see these numbers jumping back up like you mentioned. Yeah, no, and I think it's going to stay the same. So we'll see what happens. The sales to new listing ratios, giving you an idea of the every new sale that comes to market, what percentage of them are selling. And I think once you push up over about 60%, you're very much in a seller's market, like things are tilted in favor of sellers as opposed to buyers. So you can see that, again, this is a 12-month rolling average,
But if we look at that single month in these core districts, I think semi-detached and detached homes, it's very much a seller's market. No, no arguing about that. So let's dive into what everybody's always talking about, which is the high-rise segment, the condo segment of the market. We're going to talk about the exact same things. And let's start with the average price growth, because this is the first time, with the exception of April of this year, where average condo prices have decreased. And they decreased 6% based on our numbers in this pocket of Toronto's central area. And looking at the year-to-date average, we do still have a 5% increase. And I think that this, you saw my notes down here, but I think this can be attributed to two things. The first 2 months or 3 months of the year, prices were still very, very strong. And I think that helped give it some momentum. And then number two, the types of homes that are selling. I've had a lot of clients who are still interested in living in the downtown core, buying larger condos. I mean, we put something up for sale a month ago over at Bohemian Embassy over in kind of West Queen West. And we priced it very well given market conditions, and it sold within about a week or 10 days. It was, about 900 square feet, and people saw the value and they purchased it. No ifs, ands, or buts, no issues at all. So I think that the demand is still there. And this 12-month rolling average shows that if you bought, you're up 5%. Now, if you bought in November, statistically, again, it goes back to what we said before, things were a little frothy. But again, hopefully you didn't have to sell at any point this year if you just bought a year ago. And if you bought 5 years ago, 3, 5, 10 years ago, your annual return has still been quite healthy. Looking at this graph here, we've talked about it before. We've seen things kind of rebound from the pandemic's beginning, and then now we're dipping back down. And I think that, of course, that has to do with the lack of people or the lack of confidence in the condo segment. I think people not working from or not having to work out of the office plays a role. And we'll talk about all that in a minute. But sales, this was really, I think, worth noting. Sales were still up over this time last year. Like sales were up 7%. So there is some strength there. It's not as though people are completely walking away from condos. I think it was just, that's not the headline that everybody's reading, right? Everyone's reading about how, oh my gosh, things are getting a lot worse for condo owners. And I'm like, it is a certain segment of condo owners that are struggling the most right now. And Scott Ingram, realtor with Century 21, had a wonderful chart on his Twitter about a month or 6 weeks ago, just talking about the segments and the months of inventory for different housing types, and really was under 600 square feet, where there was anywhere from 5 to 7 months of inventory, when we've talked about a balanced market being anywhere from about 4 to 6 months. So it's very much a buyer's market for smaller condos. So the number of sales were more or less in line with the last 10 years worth of averages. And new listings, again, we've had a lot of new listings come out. So we've had a 100% increase in new listings over this time last year. We again have seasonal fluctuations that should be taken into account. So it's not surprising that they're down. I mean, this tends to be the trend over the last 10 years. And then this is the big thing that everyone's talking about. I mean, almost 250% increase in active listings is really the driving force behind why condo values have started to come down. Now, I did want to comment on this here, which is, keep in mind that this time last year, inventory levels were unusually low. So even if we factor in the 5 or the 10-year average, we are substantially over that. But over this time last year is a pretty big jump. Would you both not agree?
Yeah, I mean, I think if you normalize what's on the market right now, obviously you're almost up 2,000 units versus last year. But I'd say if you look at over the past 10 years, we probably have an excess of about, call it 1,400 condos that are sitting on the market, give or take, which is a lot. I mean, especially heading into December, which is typically, so it's, it's very, it's an interesting time, and it really depended. Are we going to get that demand? Like, I think you're going to talk about it next. I have a feeling you're going to talk about, what's to come. So we'll just let it sit.
Yeah. So that leads us to months of inventory and really what is on the horizon. I mean, we've seen this and we expected this. It was hard to make. I think the three of us here really did assume that we were going to see this kind of a spike in the 12-month rolling months of inventory, just given what has happened. But now we're seeing it graphically, and it's still shocking. Like, it's still shocking how quickly we got to this point, and the question does become, when do we hit that top, right? When do we hit the top of that, and how do we start coming back down? So if I scroll to the next slide, this was surprising to me. So the months of inventory in the downtown core last month was 5.3 months. And I really thought that this month we would have crept up over that into more or less buyer's market territory, but we dipped down to about 4.7 months of inventory. Now, again, when you look at different types of homes, there are different, I would argue that the 1-bedroom condo market is very much in buyer's market territory, whereas 2 bedrooms are probably more on the lower end of this balanced market threshold. You still probably are still in the seller's market for well-priced 2-bedroom condos. But I found this number here very surprising. And initially it had me thinking, are we past the worst of it? But I don't think that we are. And I'll tell you why I don't think that we are. It's because I know that there are a lot of new condos that are under construction that still have not been registered. I mean, I can think of 2 off the top of my head that we've been heavily involved in recently. Riverside Square over at Queen of Broadview, which falls just outside of this area, but is still within the downtown core. And then 1 Yorkville up in Yorkville. I mean, those are 2 projects that, although I don't expect a plethora of units to come to market from them, it's still going to add inventory to the market. And I've been waiting. I mean, Riverside Square has been 13 or 14 months now since we occupied the unit, and it still hasn't registered. If it doesn't register in the next few days, it's not going to register until January, which is just, again, adding to that inventory that I think is going to come to market in early 2021. That might still cause a spike in this months of inventory.
Let me comment on that too. I was looking at the stats of the past 3 months that we've been doing, and funny enough, the number of sales from September, October, November are around the same, like just about 600.
Mm-hmm.
But the new listings actually went down by 1,000 over last month. So that might have something to do with it as well. We were hitting like 2,600 in September, 2,300 new listings in October, and we dipped down to 1,400 in November, but the amount of sales stayed the same. So that might be your little bit of a downward turn there.
Yeah, I mean, that's actually a great question for both of you, that you're seeing it. I mean, are you seeing people holding off putting condos on the market now? I do even know some people that had condos on the market and they decided to take it off, give it a break, and then maybe put it back next year.
I have.
Okay.
Yeah, most definitely.
So
I mean, I've been even advising clients to, to pull their listings at the end of this, right about now, and relist, at some point in Q1. And thankfully, most of my clients are in financial positions where they can. I mean, if they've got 3-4 months where they can kind of sit on things just to see how they unravel, they're financially able to do that. Now, I don't think in 3 or 4 months that the market is going to be robust and that, you're going to be making an extra 10, 20, 50, $100,000 on your condo. But I do think that the next few months are going to be very challenging. And I think everybody, really what the condo market needs is, it needs some confidence. We need to know that there is, brighter days ahead. And right now it's hard to see them. So I think that, some people are not even, they know where the market is, that the writing's on the wall, they've heard it now, and they're just like, let's just wait, right? If we can, let's rent it out. Let's take a lower rent and let's rent it out and just wait. Christian, are you seeing the same?
Yeah, I'm the same. I pushed a couple clients to list next year because they don't have to list today. But to go back to your other point, Brandon, about the type of condo, I think it depends on the size of the condo as well. I mean, if it's a larger condo, I think I'm seeing a bit better performance on those ones because people are still looking to move up if they're in a small space. But if it's like a 1-bedroom or a smaller 1+10, then I would strongly urge to probably push it to next year, because I'm finding those are, having the toughest time on the market.
Yeah.
I think that's
so let's keep burning through this, because I don't want to keep people here for too long. But when we do talk about sales to new listings, this also is another indicator of where are we in the market. So condos right now, 41%. So we're still, we've crept back up from the low. But what I circled here is that where we are in terms of the actual percentage is not uncommon. Like usually around this time of year, we're seeing, we're seeing the sales to new listing ratio drop down. And a part of that is just simply, Jay, you kind of hit the nail on the head. People don't tend to list. Like they wait until busier times. I mean, the spring or the fall. So this, although has been low for a while, I don't think that it's uncommon for this time of year. When you look back historically at kind of where we've been at, the question is does it continue to stay this low? Which honestly, I think it probably will. And a part of this, kind of perfect segue over to the rental market. So, the rental market's been suffering for a while. And we know that there's no international students, or there's very few that have been coming here. We know that immigration has been a huge source of absorption. And we certainly are not at any point yet where we're comfortable bringing the, what was it again, 410, 420, 430,000 people a year over the next 3 years into the country. That will probably happen in the latter half. The number of of rentals is still increasing. But it's, again, the number of new listings that are pulling rents down. So, a 15 and 16% decrease in the average rental price does provide some reprieve that was needed, because I'll tell you, it's been very, very expensive to rent in Toronto. I think that this does give people some breathing room. And
I've got a question
sorry,
for you.
Jay.
And maybe maybe I'm not sure if we know the answer to this, but I'm wondering, the uptick in leases, could that be people moving for a lower rent? So does that count as a lease? So it's basically a replacement. It's not necessarily a net new. It's just a
I think you're right. I'm definitely seeing people either renegotiate with their existing landlords, or moving even within the building, because they can get
right,
$300, $400, $500 a month less if their landlord is unwilling to make those concessions. I'm a landlord. I've dropped my rents for tenants for sure.
I did too, and I received
Yeah.
that exact email from my tenant saying, "Here's a list of what the current here's a list of what the current
But
leases are going for in the building."
what I will say is that I was surprised that over the last week I've rented out. I've had two of the units that we've had listed. I've got offers fairly quickly from going to market. Again, I think that they were priced based on where the market is today. The owners listened to me, and obviously to the news, or to not the news, but the information that we provided that said, as much as I'd love to get you 2,800, 2,900 that you got last year, the reality is you're at 2,300 or 2,400, or if you're a one bedroom, you're getting 1,500 or something like that. And for those people, we leased. Like, the demand is there. I think it's just being aware of where the market is today and pricing accordingly. And again, no big surprises here. Urbanation produces a quarterly report about the rental market. And I wanted to highlight this here because about this time last year, October, November, I noticed, and Christian, we discussed this, that we were seeing things slow down. And it's not that prices were dropping, but it's that things weren't flying off the shelf like they once were. And I think that had a few factors that were playing in there. Airbnb rules were changing. There was more supply coming to market. So this whole rental market correction preceded the pandemic. I think the pandemic exacerbated an already, a situation that was already somewhat correcting. So I think, unfortunately, that with more of that supply coming to market, and still over the next 3 to 6 months, us not opening up the floodgates of immigration and allowing international students to return to the same extent, we're going to see more downward pressure on rents. And to all those people who I think have been sitting on the sidelines, I want to comment that rents are down 15 to 20%, depending on your neighborhood, and sale prices are only down 5 or 6%, maybe 7 or 8%, depending on the neighborhood and the building. So when you actually crunch your numbers as an investor, it's worse now than it was before. And when the prices were high, at least the rents were high. So people were like, well, I get it, 32, 34, 35% down, and I run cash flow neutral. Now the numbers are even higher for you to run cash flow neutral. So I think if you're an investor, you need to be looking beyond the 1, 2, 3 year time horizon, and be really going back to what real estate was, which was a long-term wealth creation vehicle where, 5, 6, 7 years was kind of the minimum term that you were going to hold real estate. So all of that leads us to, what do we think? Really quickly, from my perspective, what I see the next 3 or 4 months being challenging because, again, more supply is coming to market. I think that we're going to see the low-rise sector continue with upward trajectory in terms of pricing. I think some types of condos, specifically studios, 1 bedrooms, one in dens, small one in dens, will have some more price corrections. I think that there are a lot of investors who are sitting on the sidelines waiting to pounce. And I know, again, throwing back to John Pasalis, who made reference to, he believes that investors are starting to jump back in. I am starting to see it on some of my smaller units that are listed for rent. I'm getting a lot more showing activity. I'm not getting the offers yet. People want a deal. And I do think that the investors are going to set the basement, or kind of like the lower end of where this price correction will finish off. Because when they start scooping things up, and if they start, gobbling up these small units, we'll start to see some of those months of inventory decrease. And then coupling that with the vaccination, and of course, people moving back downtown, which I don't think is going to happen until probably Q3 or Q4 for work. Like, you have to remember that eventually one day your boss will likely want you to work from the office 2 or 3 days a week. So working out in the suburbs, if it becomes terribly expensive to live out there, you go back to that 2017 situation where the suburbs became so expensive. It was like, well, pick your poison. You can either live out in East Gwillimbury or Newmarket and pay a lot of money to live there and get more space, or you can spend a lot of money and live downtown and perhaps enjoy the downtown core, which up until this point you haven't been able to do. So hopefully one day we will return to that. And those are my thoughts. Christian, Jay, some final thoughts?
I'll jump in here. Yeah, I'm seeing the same. I think there's going to be a lot of pressure again on the condo market for the next few months. I think we haven't hit the bottom yet. I have had some clients that were looking to purchase units in the past that have kind of given me kind of reached out and saying, I'm seeing prices go down. Should I invest now? And I'm saying, I think there's some room to go down still, but if the right condo's out there, it might be good to snag it up. In terms of the freehold, same thing. I think inventory will remain low, and I think we're going to see a pretty spring. I think the vaccine, I think we're going to have more buyer confidence. It's going to take a while to come out, but all the signs I'm seeing is people are kind of getting ramped up to buy some freehold property in the spring. So I'm not sure how that's all going to shape up, but I think it's going to be a busy spring in the freehold market.
Jay, I'll give you 2 minutes only because
I saw the countdown. I saw the countdown. Yeah.
You saw the countdown, buddy. I'm still, I guess I just need to bite the bullet and upgrade my account.
No, that's good. I'm
just trying to pull up your file.
That's okay. I don't think we need to touch on it. It's the changes in the first-time home buyer incentive program. It's potentially good timing for those first-time buyers that want to potentially get in the market because there is the supply in Toronto. So the official, we don't have the official details yet. But give us a call if you want to talk about it. It's a great opportunity. If you're an end user, you don't have to worry about the rents necessarily. You're actually going to use the condo, so it may be a great opportunity for someone to get back in the market. The government basically gives you up to 5% interest-free loan on your. Basically, you don't have to, interest-free. They just take 5% ownership in your condo or house.
Awesome.
I said mostly it's a condo in Toronto for the amount that they're willing to give. So great. I think you were spot on with pretty much everything, and it's interesting to see how our dialogues kind of progressed over this time period, and it's been pretty close to what's actually happening.
Well, that's awesome, man. I really appreciate, as always, all of your insight, and sorry to cut you all off so short and so quickly, but I look forward to next month's charts and seeing kind of, have we turned that corner, or are we still in some hot water for the next little bit? So stay safe, stay healthy,